Welcome back to Lunch at the Market. Today is a pretty hideously ugly day, at least for the stocks that we're following. We are finally starting to see some green on the screen. Amazon, Netflix, Vico, Highsoft, Fire, Boeing, all those are green. Alcoa is certainly green today. In fact, Alcoa will kick off earnings season next week. As Joe Terranova pointed out on the Twitter wheel for the CNBC Fast Money, it's the first time in which we might actually see Alcoa report a number and then actually see price appreciation continue. A lot of people have a $20 price target on Alcoa. We are long the January 2013 12.5 calls in Alcoa. We're up about 40% on those. We're basically looking for the stock to get to that $20 level, and then even though we're long out to 2013, we're probably not going to wait around to see the rest of the story. We're going to go ahead and take our profits. Other positions that needed adjusting today. Deckers short 80-75 put spread, as you might imagine, needed some surgery today. The chart on Deckers, usually the pattern has been a flush at the open, and then after the opening flush, you've seen the stock continue to trend back up for the rest of the day. Yesterday was an extremely constructive day on Deckers. The stock actually opened up at $82 a share this morning. Looked great. Obviously, we are almost halfway through this week, so we've got next week, and then the week after is already options expiration. But there was a ton of damage done today on the chart. And if we zoom into the 1 day on the chart, it's really has not been the same story. The stock has sold off from the open all the way until it looks like about 145. 1245. It's been absolutely hideous. What we did was we went ahead and rolled down and out. So right now, or this morning, we were short the 80.75 in January. We rolled down and out. Now we're short the 75.70 in February. So it does mean that we're going to have to stay in the trade for a little longer. We did have to increase our position size, not by double, so probably by about another third. We had to increase our position size in order to stay profitable on the trade. We now need Deckers just to hold tight above that $75 level out to February expiration. Now, one great thing that this does do for us is it puts us closer to the February 23rd earnings for Deckers. Okay, I think Salesforce.com and Deckers both report on February the 23rd. It's going to be a very important day for two of the Jim Cramer's FADScan stocks. I'm going to check. The 18th is February options expiration. Okay, so earnings won't come until the week before, but people are going to, the stock's going to move ahead of that. People are going to say, well, either Deckers is going to be worse than we think, the stock's going to sell off and we'll have to adjust again, or people are going to say, well, let's be positioned ahead of earnings. I think earnings are going to be good. So the Friday the 18th is the options expiration, and then the 23rd, the next Wednesday, is when they report. We'll see what happens, but it does get us a lot closer to earnings. It also means that we're going to see a number of retail names report in between here and there. Certainly if we can get somebody like an Urban Outfitters that reports good numbers, again, somebody like a Finish Line, a Foot Locker, some of these shoe companies, heck, even a Skechers, anything to support the bull market in shoes thesis that we had in 2010, that's going to continue. The stock's trading up a little bit today, maybe about $1 from the lows, but the chart is just absolutely hideous. A lot of technical damage has been done in Deckers, and so we did go ahead and take the opportunity to roll down and out basically at the lows of the day, which basically gave us great prices for those February options, and hopefully we'll stay out of the money. We're back to having a cushion, which we like. Certainly with the stock $1.70 against us, the cushion has been completely eradicated. Now we did leave some of those spreads short 80.75 just in case the stock trades back up. We'll wait for volatility and theta, right? That's the decay of the option price due to time value. Decay some more, because really the spread's only gone against us $1.70, but those spreads are worth well over $2 at this point because there's still so much time value left in them. Okay, the other one, Akamai. Akamai is, again, been another hideous name. The stock is down 2.5% today. It has really done nothing but trade lower. Right now, it's in a little bit of a consolidation. It's bounced a little bit, 20 cents or so from the lows of the day. I think Patty Edwards called the lows of the day on Fast Money Halftime. So far, it looks like the indexes are trading that way, like that was the low for the day. We shall see. There's certainly enough risk that a continued further sell-off comes, because last year was such a monster year that we could see these names trend down. So far, we're about 50-50 holding pat on Akamai. We did roll some of our 46-43 January short put spreads down to the 45-40 put spreads in February. There's a lot of premium in those 45-40s for February in Akamai, so we did take advantage of that today on the sell-off. But the rest of it, we're holding tight. We do have some this month, 45-40 short put spreads. The rest of them are 46-43 put spreads. So we're holding tight. We still have another dollar before we get violated to the downside on Akamai. It is a great name. Let me see real quickly if I can bring up when Akamai reports. AKAM. That's your ticker symbol on Akamai. And it looks like February the 9th. Okay, so rolling down and out there gets us through earnings, and then hopefully we can see some great numbers. Netflix is a huge surprise today. They are talking about, well, really two things. One, getting a button on your remote so that you'll just click the Netflix button instead of having to navigate a menu, which is what you have to do now, which is, it's not a terrible inconvenience. You press one button on the menu, it brings up your internet-enabled options. Netflix is one of them. You arrow over and select it. They're going to get a button right on the remote, and I don't doubt that they're going to do that. The second big piece of news from Netflix today is they're talking about buying Starz, the content company. Starz supplies a tremendous amount of their content right now, and there was already a lot of talk regarding Starz in terms of how much they were going to have to pay up for that deal that they had with the company. By buying them, they're going to alleviate that concern or overhang, and they're going to see full margin benefits of all that content because they won't have to pay a third-party supplier. So I think it's a great deal. I think the companies like Time Warner and Disney should probably look out for Netflix. Clearly, their strategy is that they're going to remain a huge player in content. They have a massive head start on anyone else that wants to do a streaming platform. I know there's been some talk recently about Sears coming into this space. Netflix is a well-loved name. Millions of Americans use it. There's an international opportunity to expand the content worldwide. They're already expanding into Canada right now. They might as well go south of us and start in South America, start in Mexico. I think there's a great opportunity. So while the deal will probably have to be done in cash for Starz, I think it's accretive. I think it helps out margins. I think it helps out that conversation. We're still fans there. We're short this 160, 155 put spreads in January on Netflix, and we're holding those real tight right now because today the stock is actually up almost 1%. Okay, thanks for tuning in again today. Remember, if you're short those Deckers 80, 75 put spreads for January, just remember for us, we've already rolled down and out of those. We'll stay in the trade until February now. We'll get a little closer to earnings. Akamai, we're about 50-50. We're going to stay in those 46, 43 put spreads for January, and we have started to add to and roll down and out to the February 45-40 put spreads. They might actually be 45-42s. I don't think you have to go all the way out to 40 to get the spread that you need at a great price. All right, thanks for tuning in again today. Have a great day, and we'll see you tomorrow.